And welcome. You're with us here on Business Today. I'm Maharaja. Here are the day's top stories. Retail inflation rises to 7% on the back of higher food prices in August. CPI inflation remains above the RBI's comfort zone for the 8th consecutive month. Robust gains on the Lal Street. Sensex holds above 60,000. Nifty top 17,900. Titan, Adani Ports, Tech Mahindra top gainers. Markets continuing their winning run for a third straight day. Sensex and Nifty closed at nearly 1 month high. Sensex reclaiming 60,000. Nifty too rose over 100 points in an effort to achieve the 18,000 mark. Gains in IT, auto and realty stocks aided the rally. Adani Ports was the top Nifty gainer with the stock hitting a fresh 52-week high. Titan gaining more than 2% on expectations of strong festive demand. Other top blue chip gainers included Tech Mahindra, Divi's Labs and Axis Bank. On the flip side, Coal India, Shree Cement, Nestle, HDFC and HDFC Bank were the top Nifty laggards. Our global business editor, Udayan Mukherjee, joining us now. Udayan, markets continuing to hold fort. Things are looking pretty optimistic as we head into festive season.
Hi, Abha. Yeah, it's been a pleasant surprise, this whole ride in the market for the last few weeks. I think part of the reason is technical, of course, because we've got that $6 billion plus coming in from FIIs through the month of August. And global markets have all been very strong, led by the US. So I think we are playing along with the general global tide at this point in time. And of course, there have been a few green shoots out here as well. The August auto data, auto sales data, and the PMI numbers have been very robust. So all of that has helped the cause. And I think for foreigners, the biggest trigger has been the collapse in the price of crude, and now down to almost $80. So I think all of that has aided India's cause. But having said that, now with the Nifty nudging 18,000 and the Sensex back at 60,000, I think global economic realities have not changed that much. And while markets can continue to rally on, I mean, given technical factors and the newfound optimism as you spoke about, I mean, we could even go to new highs. But my suggestion would be at this point in time, and this is at best an educated guess, I could be totally wrong, that this probably is a good time to take some profits off for people who've been in the market. Because again, my guess is that between now and the end of the year, there will probably be another leg down in global markets. I would be very surprised if that did not happen. And investors generally probably will get better entry opportunities into this market at this point, given where valuations are and how sharp this rally has been. There is no way to predict what will happen over the next few weeks. And as I said, I could be totally wrong. But at this point, I think prudence probably would lie in becoming a little bit more cautious in your stance and maybe even skimming some profits and waiting how the global tide pans out over the next few months. As I said, I would be very surprised if we don't get another sharp leg down sometime in the next couple of months.
The pace of flows into equity mutual fund schemes has seen a sharp slowdown. Investors refrain from fresh purchases in a volatile market. Are mutual funds, which were the go-to investment for many for the past 2 years, not attractive anymore? Udayan Mukherjee, our global business editor, and I spoke to Harsha Upadhyaya from Kotak Mahindra AMC about some of the sectors that they're finding value in current times.
Before we talk about the markets, I want to ask you about what your experience has been in the month of August, because we heard that there has been some outflows from mutual funds, not in all categories, but in some categories. So if you could start by telling us which categories of funds you've seen some kind of slowdown in inflows or even outflows, and what the SIP experience has been at Kotak AMC.
Then you're right. I think the numbers in terms of equity inflows for the month of August were not so great. While it is still a positive about 6,000 crores for the month at the industry level, this has been much lower than what we used to see in the early part of the year. Clearly, July was a slower month as compared to June, and that trend has continued into August. While this has happened, the SIP numbers have continued to be very, very strong. In fact, the current SIP numbers are the highest levels that we have seen in the recent times. It's about 12,600 odd crores per month. Whereas the redemptions have picked up a bit. Maybe it's some sort of profit booking at earlier highs as we are reaching 18,500 kind of Nifty levels. or it could also be due to some other factor. But clearly we have seen some level of reduced participation as far as lump sum investments are concerned, and also some bit of redemption. So overall the numbers are still positive, but it is much lower than what we have seen, let's say, between Jan to June of this year.
As a fund manager, do you share this caution that you're witnessing from your investors, the domestic investors? I mean, do you find the market overheated or overvalued after the spectacular run-up that we've seen over the last couple of months, or would you stay the course?
Udayan, we would have been happy if markets were at levels that we had seen in the month of June, for example. That was definitely lower than the fair range of valuations when you look at long-term averages. But we have seen a very sharp rally of about 15% odd in the last 2 months. So to that extent, there is some bit of valuation correction that has happened on the upside. Currently we are trading at slightly higher valuation levels as compared to long-term averages. So I would say to that extent the risk levels have increased in the market, but it's not something that one should be too worried about as yet.
We'll talk at length about the portfolios that you run, but in some of your portfolios you have a fair bit of exposure to the global sectors like IT. I mean, you own the Infosys and TCSs of the world as top weights in some of your funds too. But I mean, how would you approach that space, given that there has been some skepticism because of the global situation, but of late there has been a pickup and a pullback in those stocks as well? How would you position yourself there now?
Then, while we do have a couple of IT names in our portfolio, but if you look at the entire portfolio, you won't find an overweight position on the IT sector. And clearly we were one of the first fund houses to actually reduce or completely avoid mid-cap and small-cap IT names sometime even before the markets peak last year in October 2021. So to that extent, from then onwards we have been cautious on the IT sector. While the management commentary is still quite positive, we believe that things are not likely to be same as you go forward. There is every likelihood of 2023 IT budgets to get delayed or even curtailed to some extent, and we are already seeing some pressures on the margin across companies. The hiring numbers across the industry has been quite muted in the recent times. So all these things point to the fact that business momentum in the IT sector is somewhat stalling. While in the earlier period, this sector gave higher than market average in terms of earnings growth, and that's when we saw an outperformance from the sector. But as you go ahead, we believe that domestic focused industries could do much better than global focused industries, since domestic growth is still resilient and still 6% plus. So we are betting on some of the domestic businesses as compared to IT sector, and it continues to be an underweight position across our portfolios.
Okay. At a time like this, Harsha, would you stick with perhaps the the large caps, the ones that have a credible history of performance, or would you take those contra bets in a market that has been extremely volatile over the last few months?
We are sticking to mostly established large cap names across the mandates where we can take exposure to large caps. Obviously there are also mid cap strategies and the small cap strategies which run mostly predominantly on mid and small cap categories. On just the valuation front, we believe that, as I mentioned earlier, large cap segment is slightly above fair valuation when you look at it from a long-term perspective, whereas mid and small caps are trading slightly higher than even large cap segment. And also there is a large degree of outperformance that we have seen from mid and small cap category over the last couple of years in the Indian market. So to that extent, if market continues to be volatile or continues to consolidate at around current levels, we would probably see large caps doing much better, both in terms of returns as well as volatility, I would say. So to that extent, our preference wherever possible has been slightly towards large caps.
And in this large cap financial space, Harsha, I mean, I was looking at your equity opportunities fund portfolio, which is a very large fund. Some of your top holdings are ICICI and State Bank of India, and it's interesting because maybe a couple of years ago the top holding would be HDFC Bank, but across mutual fund portfolios, this seems to be a recurring theme. the presence of ICICI and SBI over an HDFC Bank. Could you just take us through whether your priorities or preferences have shifted over the last few years in terms of large cap financials?
Udayan, you are absolutely right. I think if you had seen our portfolios maybe 3 to 4 years earlier, our top weights in the banking sector would have been very different than what you are seeing today. Clearly, some of the names that you mentioned, ICICI Bank and SBI, have been doing quite good on the asset quality front. In the recent times, I think there is not much of a difference between the asset quality situation of some of these banks and the earlier ones where we used to have usual overweight on. The credit growth for the system itself has been growing at double digits, and it's been consistently improving since the beginning of this financial year. So on one hand, you are seeing asset quality issues behind us, and secondly, credit growth outlook is improving. And there is adequate capital on most of the banks in terms of growth capital. And we believe that this is at the beginning of the cycle in terms of overall investment cycle for the country, and that is when one need to bet on financials because they are closely linked to economic outlook. And also this is a time where interest rates are also moving up, which means some of the large banks which have a higher CASA and higher ability to retain that CASA would be the ones who will be able to get better margins and better spreads as compared to, let's say, non-banking financial companies or smaller banks. So that's where you see the tilt towards some of the larger banks in our portfolio.
And you can catch the full interview on businesstoday.in as well as our YouTube channel. Retail inflation returned to the 7% territory in August from a 5-month low of 6.71% in July. This on the back of surging food inflation, which has jumped to a whopping 7.62%. On the other hand, industrial growth too has taken a hit. Karishma joining us with more on this. Karishma?
Well, India's retail inflation has snapped a 3-month downward trend with CPI at 7.0% in comparison to 6.7% in July. This is, of course, clearly because of the rise in food prices. In fact, food inflation for the month of August has come at close to 7.6%. This is because of rise in prices of basic consumer goods like rice, wheat, barley, and also, of course, edible oils. It's not just the food inflation that has contributed to this hike, but it could also be the erratic monsoons which will continue and of course contribute on an upward trend that could be seen with inflation taking a further hike. Now, if you also look at the industrial production growth, you will see that on a month-on-month basis, the index has decreased by 2.75% in July as compared to 0.5% in June, which is of course also impacting the production side of it. Now, it's a task in the hands of Reserve Bank of India, the central bank, who has to take certain measures. In its August monetary policy meeting, it had decided to hike interest rates, and in fact it also seemed confident that in the coming months things will get better. But recently, Finance Minister of India on a public forum also commented that it would like RBI to look at certain other synchronized ways and strategies, just like how the Western countries, in order to take a re-look at handling inflation in the country.
Air India embarking on a fleet expansion drive. The company will lease 30 aircraft over the next 15 months to boost domestic and international operations. This is the first major expansion of Air India's fleet under the Tata Group, which took control of the airline on January 27th. Let's head across to Karishma Asadani for more on this. Karishma?
Well, of course, it has to be no turbulent times for Air India, the Maharaja that we are talking about, because Tata-owned Air India has now plans to induct 30 more aircrafts in its fleet. In fact, in an official press release today, they've listed that in order to expand their domestic and international services and to, of course, upgrade experiences for consumer. They have decided to induct about 30 aircrafts, 5 of which are going to be wide-body Boeing aircrafts and 25 are going to be Airbus narrow-body aircraft. They plan to do this from December 2022, and this is coming after a really long time, especially the fact that aviation was facing a lot of turbulent times. Tata's handover in the month of January has given a lot of new changes and Air India 2.0 for its consumers. Meanwhile, what we're also picking up from our sources, Abha, is that government has set off its plan in order to sell the subsidiaries of Air India. In fact, we are being told that a couple of subsidiaries, including the transport arm, the engineering arm, the Alliance Air, which of course has been under the process of disinvestment for long, and the Hotel Corporation of India, 4 of them are under government's eyes. We are also being told this week stands crucial because for its transport arm and the whole ground handling service, government has shortlisted 3 bidders with whom it will be holding meetings this week. It is the Bird Group, which is of course we know the famous sibling duo and who operate out of Delhi. We also have Celebi Aviation, which is a ground handling company that is based out of Turkey, and I Squared Capital, which is again a private equity firm that is involved in infrastructure investments. So these 3 companies, government will be holding meetings this week and they're looking to sell and monetize subsidiaries of Air India as soon as possible.
All right, Karishma, thanks for that. Tata Motors launched India's first compressor natural gas powered medium and heavy commercial vehicle trucks that are equipped with advanced assistance systems. The trucks are also equipped with collision mitigation systems, lane departure warning systems and driver monitoring system. Karishma has also been tracking this. Let's go across to her conversation with Mr. Girish Wagh, the Executive Director at Tata Motors, on some of these new launches and their plan on introducing electric vehicles in 2023.
On a global scale, we've seen some kind of downfall when it comes to exports of commercial vehicles. But of course, on the parallel side, we have seen very good sales in the domestic region. What do you think are the reasons, and going forward, do we see exports getting better? Because I also understand it's the post-pandemic time, and because of a lot of geopolitical factors, they've been rescaling of things.
Yeah, you're absolutely right. See, I think because of various geopolitical factors, we've seen the inflation in many of our international markets go up significantly, and it is also the fuel price increase. So inflation as well as fuel price increase is something which has happened at the same go. Many countries are also facing challenge of foreign currency reserves, and therefore imports are getting impacted. And most of the areas or sectors that we are in, whether it is SAARC or for that matter Middle East and North Africa, I think these are seeing some slowdown. Especially SAARC is seeing quite a bit of a slowdown. So at this juncture it is very difficult to predict when these countries will come back, when the demand will come back, but we are keeping a very close watch on the key monitorables in these markets, and I think hopefully we should start seeing better days as we move towards the end of the year.
Great. You did talk about the fuel shortage, and that also brings me to the point that you also mentioned in the launch, which is about moving towards electric vehicles, at least by April 2023. How's the plan? Is it on track?
Yes, so as we have said in the past, we are working on electrification of range of vehicles. Right? It is not just 1 or 2. So we launched a range of buses, which are doing pretty well, those which have launched and those also for the orders that we have in the pipeline. We've also launched the electric small commercial vehicle, that is the ACE, which also has been doing pretty well in the customer trials, and now we are getting ready for commercial introduction.